Bitcoin is becoming more and more interesting as an asset to hold. And so over time, what's going to happen is Bitcoin will start becoming much more interesting. And the biggest difference for sovereigns between Bitcoin and gold, other than the practical matters, easy to transport, transmit, hold, et cetera, it's fungible, is the fact that we keep producing gold.
What if I told you that the biggest threat to Bitcoin mining isn't regulation, it's artificial intelligence? Fred Thiel, the CEO of Marathon Digital Holdings, the second largest publicly traded Bitcoin miner in the world, holding over 45,000 BTC, is sounding the alarm. In a recent interview, he dropped a bombshell. Bitcoin isn't alone anymore. There's a silent war unfolding for power, data, and infrastructure, and AI just walked into the ring. You see, Bitcoin mining farms, those high-powered, energy-intensive facilities built over the last decade, aren't just attractive to crypto miners anymore. AI giants are now swooping in, locking up energy sites that were once considered too big to ever max out. Even sub-500 megawatt locations once reserved for industrial-scale miners are vanishing fast into the jaws of the AI gold rush. Fred puts it bluntly, this feels like the dot-com boom all over again. Back in the early 2000s, everyone added .com to their name, went public, raised millions, and then came the crash. Hosting companies evaporated, the hype collapsed, the cycle reset, and now we're watching it happen again. But this time, it's not web domains. It's GPU clusters, machine learning, and hyperscale data centers. Big tech is going all in. But Thiel warns, they'll soon realize the economics of running an AI center are nothing like mining Bitcoin. Different infrastructure, sky-high uptime demands, massive cooling costs, and guess what? Many will overextend, cancel contracts, and collapse under their own weight. So where does that leave Bitcoin? Fred sees strong tailwinds ahead. The recent market correction fueled by fears over US tariffs and rate uncertainties is just a shakeout. He believes Bitcoin is bracing for another wild ride to its next all-time high. In fact, Marathon Digital isn't just mining, they're stockpiling. Their Bitcoin treasury is a strategic reserve, potentially more powerful than gold in today's debt-laden world. As nations like El Salvador double down on Bitcoin and Trump hints at using a weaker dollar to crush US debt, the game is shifting. Sovereign adoption is no longer theory. It's unfolding right now. So stay in Bitcoin mining or pivot to AI? Fred Thiel is betting on both, but with caution. Because in this new data-driven war, power is king, and only the prepared will survive. Before we dive deeper into this episode, do me a quick favor. Like this video, drop your thoughts in the comments, and share it with anyone trying to make sense of the crypto and AI storm. And of course, subscribe for the sharpest takes on Bitcoin's next big move. Thank you, and enjoy the video.
If China were to go all in on Bitcoin, right, that would be scary for the Bitcoin world. So you need to have gold, you need to have Bitcoin. But it's really interesting. So the US has been repatriating a lot of gold from offshore. Right, and this is kind of the reverse of what happened in the 70s when France was sending battle destroyers to the US to go pick up their gold and bring it back to France. Because there's been a really interesting arbitrage play between the price of gold in Europe and in the US. And gold is physically hard to, I don't know how many of you have ever picked up a gold bar, but and you can't cut gold bars into pieces and make it fungible. And so gold is kind of still an instrument that sovereigns look at as an asset to hold. Gold can have a loss in value because it's not finite supply, whereas Bitcoin is a finite supply.
One other thing that people have been asking me in the last couple of weeks is around the hardware. You mentioned the liquid immersion and kind of cooling systems that are being built now. What else should we be paying attention to there? And I think that there's a lot of great chip manufacturers and all this stuff for the AI world. What are you seeing on the Bitcoin mining hardware side?
So if you think of the technology stack in Bitcoin mining, you have power management in the bottom. Then you have processing. And the reason I say that is a Bitcoin mining ASIC, it's calculating a SHA-256 algorithm. It's pretty basic. The secret sauce in ASICs is the power management and how they operate. And having the ability to leverage variable frequency as well as variable voltage. And there's a whole science to that as to why that's important. But you basically have ASIC technology between power management and compute, if you would, in the bottom. You have cooling technology because you want to have the lowest PUE. PUE is a metric of how much energy over and above the production energy is being consumed by cooling, things like that. And the average AI site has a PUE of about 1.5, which means a third of the energy that's used at the site is not calculating, it's not doing compute, it's everything else. If you use two-phase immersion cooling, you can get that PUE down to 1.1, which frees up a lot of energy for use. So the technology stack starts becoming important because people will add capacity to the point where Bitcoin mining is a break-even business, right? In a run-up, they will add capacity, and then eventually, because that's the way the calculus works, the difficulty rate will get to a point where it's kind of a break-even business. And so what you have to look at doing is how do you put Bitcoin mining into all sorts of things where the energy is free?
You have 45,000-ish Bitcoin on the balance sheet. Why not just become a Bitcoin Treasury company? Those seem to be doing pretty well.
You can choose to just accumulate Bitcoin, but you need to find a way to acquire them. So either you use debt and use creative financing forms, kind of like Strategy does, and they've been very successful in doing that, or you can generate profits that you can convert into Bitcoin, which is less dilutive to your shareholders. We believe it's a mix, right? There are times in the industry where Bitcoin will go through a pretty impressive price appreciation. And you have to look at, if I'm going to invest $1 billion today, build a site, do all this stuff, it'll take me 12 to 18 months to produce my first Bitcoin. What will have happened to the price appreciation of Bitcoin in that time period? And last year, we had the belief and conviction that Bitcoin price is going to move. And so it makes sense to buy Bitcoin at $50,000, $60,000, $70,000 because it was going to run. And part of the reason we had 1.2 billion of adjusted EBITDA was because of this run up in the price of Bitcoin that we held. Had we not bought $2 billion of Bitcoin at the end of last year and in the fall of last year, we wouldn't have had that same size number. So it's really balance sheet management, and it's being really smart about how you allocate debt, how you allocate equity, and how you invest in depreciating assets. Now, here's a key thing. Most miners today that operate sites, especially if you're grid attached, you're paying 4 cents a kilowatt hour. Global hash rates, not only doubling every halving, but in between, it's most probably tripling, right? In 2023, we had a halving just because global hash rate grew. We had a halving earlier this year, and global hash rate has continued to grow. And hadn't the price of Bitcoin taken this dip, we would have been on our way to 1.2 zettahash of global hash rate by the end of this year, possibly. China has turned on mining again. Russia's mining, et cetera. It's growing. So it's really important to look at the biggest CapEx number a Bitcoin miner has are their machines, right? The infrastructure you can write off over multiple years, but 70% of your CapEx are your rigs. Well, you have to write them off over 3 years. Imagine if instead of writing them off over 3 years, you could take that miner after 3 years, put it into a site where you had almost no cost energy that only runs 5, 6, 7 hours a day. You just extended the life, and you become much more capital efficient because now you're getting a much better return out of your assets. So becoming Bitcoin mining today is you have to be a very smart capital allocator, you have to be a very smart financer, you have to really know how to manage your treasury, and you have to know when to buy, what to buy, how to build. It's a very complex business.
You mentioned Russia, China, many other countries are all kind of looking at this. Everyone's obsessed with the strategic Bitcoin reserve, rightfully so. We saw Abu Dhabi come out and say that they've started to buy at least the ETF, maybe more. But everyone seems to have completely thrown aside the offhand comments of, I think it was a Russian finance minister, and then also of Putin saying, not only are they mining, they're using it for transactions, and it seems like they're kind of, I don't want to say going all in, but definitely becoming much more friendly towards Bitcoin. What are you seeing at the nation state level? I know that you guys have looked at various sites around the world. Just talk a little bit as to how do you evaluate who's real, who's not, who's talking, and who's actually acting?
So the global economy has operated with a very high dollar dominance. with the current level of US debt, the previous weaponization of the dollar, the global economy is very scared of dollars, right? The international sovereigns have decreased their buying of US debt. The sixth largest buyer of Treasury bills today is a stablecoin company called Tether. And the US government is very scared of the world going away from the dollar. And so they want to ensure dollar dominance. You know, President Trump said he wants the BRICS countries not to abandon the dollar, right? So if countries are moving to own lots of Bitcoin and trade in Bitcoin, the US has to have a lot of Bitcoin, and they have to hold a lot of hash rate, because Bitcoin mining, I think, is this big misnomer. We should really rename it. It's called Bitcoin transaction processing and Bitcoin network security. Two different functions, right? Because if the rest of the globe has 80% of the global hash rate, well, people transacting in the US with Bitcoin may be locked out of 8 out of every 10 transactions, or 8 out of every 10 blocks. And so it becomes of strategic importance for the US to have a lot of mining inside the country. To do that, we have to have much more liberal energy policies. We have to fix FERC and permitting and all these other things. But the US also has to build a very big strategic reserve of Bitcoin, because we have a strategic oil reserve not because we're short of oil in this country. We pump more oil out of the ground here than Saudi Arabia does. We have lots of gold in Fort Knox, not because the dollar's backed by gold. That ended 50 years ago. We have gold in Fort Knox, so if there's an attack on the dollar, the US government has a way to defend the dollar. And it's not something they talk about a lot. We have a strategic petroleum reserve so the government can control the price of oil domestically, which is what President Biden did not too long ago. So we need a strategic Bitcoin reserve. Other countries know we know that. They know it, and they're starting to buy. And even countries where before there was a belief that Bitcoin is this bad thing are waking up to the fact that they need to hold some Bitcoin to make sure that they're not left out of this game, because the US government's intention is to inflate away the debt. And by that, I don't mean let inflation run rampant. They want the dollar to devalue. Right? The dollar index today is trading at about 1.06, right? It should be down at about 100, as it's called, right? Which is a even par to where it's been historically. So the dollar's overvalued right now. If you devalue the dollar, how do you do that? Some of you may have heard that the Trump administration has talked about creating a sovereign wealth fund. What happens when you take lots of dollars, sell them to buy other currencies to go buy and invest in other countries? The price of the dollar goes down. What currency is our debt denominated in? Dollars. How do you get the debt to go down? You make dollars less valuable in the world. Those of you who earn W-2 income, those of you who do not hold real assets, those of you who do not hold Bitcoin are the ones who will suffer from that. And other countries understand that. The bulk of foreign countries' reserves are in dollars. If the US is going to take the dollar and devalue it, the last place they want to be is holding a bunch of dollars that are getting worth less every day. And so the only solution is something that is not controlled by central governments, and that's called Bitcoin.
And that's a wrap for today's video. I hope you found some real value in what we covered. Fred Thiel's take on Bitcoin and mining definitely gives us a lot to think about. Now I want to hear from you. What's your take? Do you agree with his insight, or do you see things differently? Drop your thoughts in the comments. I'll be reading through them all. If this video helped you see Bitcoin in a new light, give it a like and share it with your friends and family. And don't forget to subscribe so you never miss out on the latest Bitcoin and crypto updates. Thanks for watching, and I'll catch you in the next one.